The only thing that you need in trading is something that repeats on a consistent basis. After many years of studying and trading in the live markets, I found something that's changed my trading forever. And I guarantee if you stay till the end of this video, it'll change yours too. So one of the biggest problems that ICT traders have is they can't determine a draw on liquidity or have the confidence that the market will trade to that level. So this often leads to closing trades prematurely, or you don't have the confidence to take the trade, and when the move finally happens, you're just not on board. But what I'm about to share is going to help you identify a draw when it appears and be confident that you're aiming for the right target. So without wasting any more time, let's get into the video. So what I'm about to share is something that I haven't seen anybody talk about, or if they have, it's not very well known, but I've been using the same exact setup and these same concepts for a very long time. And some of my biggest trades are actually when I'm spotting these in the marketplace. So it's something that I call the vortex candle. So a vortex pulls everything within its reach, spiraling towards its center with unstoppable force. And that's basically when we're thinking about a draw on liquidity, we want to feel confident when we're placing our trades, and we want to feel confident when we're putting that risk on, that we have the ability to hold the trade, manage the trade appropriately, and be able to see that trade through to its final target. And that's just something that takes a lot of time and experience. And when you're not confident in what the draw on liquidity is and it doesn't make sense to you, then you're more prone to puking the trade early. And that is not a comfortable feeling, because when you puke the trade, a lot of times that trade might work out in your favor. But this is something that I've been using in my trading for a very long time, and I haven't really talked about it a whole lot. So by the end of the video, you'll understand why they work, how to spot them, and how to anticipate setups. All right, so what is a vortex candle? It's a candle that's left behind no wick on either side. Now this candle is going to act as an inefficiency to be revisited at a later date. Now I'm not talking about the candle that's forming right now. I'm talking about a previous candle that's formed in the past that will act as a draw on liquidity. All right. And these candles will often occur after news prints. So something like CPI, if you see a massive candle print one direction and it leaves a wick, or it doesn't leave a wick behind, and it hasn't traded to that level that same day, at some point it becomes a risk in the marketplace where that no wick candle or vortex candle is going to become a high likelihood trade where the market is going to gravitate towards that level, right? The market doesn't like leaving these areas behind and has a high likelihood acting as a vortex on price, right? It's just pulling price in because it wants to trade to that level and offer price at that specific candle. The candle doesn't need to be traded to. That's one thing that I'm going to preface before we get into some of the examples. So the only thing that we care about is the way that it acts and the way that it's going to help us determine our bias. And I mean, I have a ton of examples, and this is just something that you guys can go and backtest and study in the live markets going forward. All right, so here's an example of a vortex candle. And this, yes, there's a volume imbalance, but some of them, what I'm going to bring up, there's no volume imbalance. So it's just something that I mark out on my charts. I see them from time to time, and oftentimes they're rollover periods or they're news candles, whatever the case may be. I just can visibly see that some of these candles don't have wicks on them. And the biggest determining factor is, and I think one of my students brought it up, was they wanted to point out some no-wick candles, but the problem was that the prices were actually different. So the biggest thing that you have to focus on is make sure you have the open, high, low, and close prices listed here. Listed here. And when you're hovering over the candlestick with your crosshair, just make sure that the open, high, the lower, the close, whichever ones you're looking at, are the same. So for this candle, the open should be the exact same price as the high. And if it's off by a tiny amount, that's not what I consider a vortex candle or a no-wick candle, right? This is just one example. Yes, it did trade up into the volume imbalance, but when we're down here, when we gap down and this candle doesn't leave behind a wick, that's kind of what I'm looking at as being a high risk factor for the market possibly trading lower. Like when we have a candle that prints lower and doesn't create a wick on one side, oftentimes I can use that as a target going the opposite direction to eventually hit that level. So there's opportunities in here to go long and use this as our target. Yes, there's a trade that moves lower after tapping into the volume imbalance and after hitting this no wick candle, right? But on the other end, like even when we don't have confirmation that the market's going to turn bullish yet, this right here is giving me red flags that, all right, the market might not continue lower just because there's a candle that is resting in the market that does not have buy-side delivery on it. All right, so that's just one example. Here's another example here where this is our weekly open, and we have more price action where now here's another example here where this candlestick, the price was the same as the open. And oftentimes when this happens like on a weekly time frame, let's say if Monday opens up and it just continues one-sided, many times we can just wait for that specific turning point in the market. Maybe it's a market structure shift, or maybe it's a breaker, whatever the case is. Whatever you're looking for, fair value gap, it doesn't really matter. You're using this inefficient candle, the vortex candle, as your draw on liquidity. Okay, so when we're up here after taking out this previous high, now all of a sudden I have a really strong indication that, all right, there's a no-wick candle down here. We might trade to that level at some point in the future. All right, and that's something that I've kind of picked up over the years, and I've studied and I've really leaned into, is when we have these setups that appear when there's no wick on some of these candles, I'm using that as kind of my counter trend idea. So we have an expansion higher, but because this buy side this bullish candle left behind no wick, it makes it vulnerable for continuation moves higher. And you guys can see that the market wasn't allowed to continue higher until we came back and touched that level, right? So oftentimes I'm using them as counter trend, or I'm using them as areas that, in my opinion, are just super inefficient and at some point we'll trade to in the future. So even an example like here, yes, you could possibly go long, but it's only lasting for a very short time period, right? And trying to go long, obviously, is very choppy. So we do have this no-wick candle, and you guys can see that at some point, traded to, right? So this is acting as a vortex, pulling price back to rebalance that level. Here we have another example, right? We have no-wick candle, trading lower into what? We have this dealing range. So from this low to this high, just pulling back into a discount. These are very vulnerable levels to trade to in the future, okay? So oftentimes these are just manipulative moves where, it's not a power of 3 setup because you don't get the wick created on the same candle. You get an inefficient candle that will probably need to be traded to at some point in the future. Here's another example where we have no wick, right? This might suck in a whole bunch of sellers into the market, a whole bunch of bears. We're just taking out liquidity. Now, all of a sudden, this becomes a high risk level that is possibly going to be traded to in the future. Okay, so when we have these candles that, the print on the candle is the high is the same as the open, or the low is the same as the open, that's when you're going to get these vortex candles where essentially it doesn't matter how far away we run from it, at some point, it's going to go trade there. So let's say even if we didn't trade on to that candle on this one, if the market was just trading sideways like this, after we get this run on liquidity, now all of a sudden I still have that same level in mind as my draw. Here, another example, right? But this also has a volume imbalance. Just notice that once we trade lower, it becomes extremely risky to try and go short, because if this was printed on news, and oftentimes these no-wick candles are printed on news or specific high volatility days. This is, at the time of this recording, this is August 25th, and on Friday, I'm going to kind of get into the example of the trade I took. This daily candle didn't have a wick on the bottom. Again, here we have an example where this candle produced during London session, possibly could have been a news event, didn't have a wick. So the high was the same as the open, all right? And when we're trading down here, that makes me very skeptical of price trading higher. We also have another setup here. So you guys can see, as soon as it's touching these vortex candles, we're getting reactions at them. So they're not just used as levels of, as a draw on price, but you can use them as soon as they're hit, then you can use them as additional confirmation that, if it lines up with a fair value gap as well, now you have another indication on why you would want to go short. This one obviously did not provide a fair value gap, but as soon as we tapped above that level, you guys can see that we pretty much turned around and then took out the low here. So when we leave these candles behind that don't have wicks on them, right, they act as magnets on price, which is why I'm calling them vortex candles. I haven't really seen anybody talk about them. They have, drop a comment, go ahead, feel free. But I've been using these types of setups along with all of my other ICT setups as another piece in my toolbox, like another tool in my toolbox that I use to find setups in the market. And I have a bunch. I'm not just a one-trick pony. I will use multiple setups to find something in the market. And that's really why I can be very active in the market, because I'm seeing so many different things that provide so many different opportunities in the market. It's not just one setup. But I would say if you're just getting started, this is a really great way to try and understand markets because, you know, just like fair value gaps, these are very easy to spot. Once you spot them, it's almost like you can't unsee them because I'm scanning through the markets and I can visibly see if these markets have wicks or not. Right, this one doesn't have a wick. And I think I would have to check the price because I don't have the actual trading view chart in front of me. But if this didn't have a wick, now all of a sudden this run higher becomes extremely acceptable. And when this happens, right, I'm very unlikely to participate in any of this move higher. So even if we pull back, I'm not trying to go long until we get to that specific level because that becomes a very low probability setup because I think at some point we're looking to trade to those candles that don't have any wick. So like here, this is a low probability long in my opinion. Here, low probability long. And as you can see, yes, you might get a short run higher, but until the market trades to those specific levels and fills in those inefficient candles, then I'm really just waiting on my hands. Even here, right, on this run higher, if you're chasing the market higher and trying to trade this fair value gap, well, it doesn't really work out, does it? You don't get the expansion higher to this external range liquidity. Right, you're trading into this buy side imbalance, you're expecting it to go long, but this is a risk, okay? These vortex candles are risks because the market is going to draw to those levels because they are inefficient candles. So this was what I sent out to my group on Friday, and I noted that there's no bottom wick on ES, and that's essentially what I'm looking at on the daily time frame. Yes, as a power of 3, but I would use the same exact mindset when I'm looking at candles that don't have a wick. So when I'm targeting a specific candle, let's say the weekly opened up and it continuously traded higher, and even though on the weekly time frame there's a wick on the lower there's a wick on the higher time frame, maybe on the lower time frame there's a candle that doesn't have a wick. Okay, that's just something that is kind of a nuance that you have to look into. That some data on different time frames will provide you candles that don't have wicks versus others. So when you're scanning through your charts, I'm always looking for these different types of candles, engulfing candles, pin bars, whatever you want to call them, just basic price action candles. This was something that I kind of picked up and just noticed over time because what I would do was when the news event released and it printed, and let's say if it was a high impact news release and it printed and I wanted to go short or long based on a retracement of that news candle, the reason I was losing those trades was because it would print one side and not leave a wick on the other end. And it wasn't because of a power of 3 or anything, and that's not how I'd categorize it. But when we get a really quick print from the market, it might take weeks, it might take months for it to retrade to those levels that don't have a wick on them. But because there's somewhat of an inefficiency in the market, I know that they are used as, you know, gravitational pulls on the market, and that's kind of what I'm looking for. I'm looking for just a bias that I can trade towards, and then I'm using my entry models for that specific setup. All right, so this was the lower time frame. So as I mentioned, you know, no bottom wick on ES. Watching this for today, I was looking at this sell side imbalance, and I was assuming that we were going to trade to that candle that didn't have a wick. We didn't actually get that, but what I did see was we were trading at the previous daily high, and we had an inverted fair value gap here, or you could call that a breaker, whatever you want to call it. We had this fair value gap that broke market structure lower after the run on liquidity. You guys can see that I actually sold the market at 56.3575, and then I got stopped out because it ran higher. And this is what gives me confidence in some setups that I give multiple chances, where I get stopped out, but because the market's rallying doesn't off-put me from the fact that I want to continue going short, because I have a candle in the marketplace that, in my opinion, is inefficient. Now, if you guys look at the market on Friday, it didn't actually reach to this candle, but I was able to close most of my position before it ran higher in the afternoon. And that's really all I need, is I just need a draw on liquidity. I don't need it to actually go to my liquidity target. Yes, a lot of times, all the examples that I just went through, you guys can see that they did trade to those specific levels, but you don't need to get the whole move to understand that you're looking for just higher prices. So after we take out liquidity, you could go long and just target some of these candles that don't have wicks. You guys can see that this one doesn't have a wick either, right? To me, that's not really like a power of 3 thing, because I would have looked for a run lower and then a run higher to close the day, right? It didn't create power of 3 because we never closed above that level during the same day. So even if it's left in price action days from now, weeks from now, months from now, years from now, I'm looking at those levels and saying, all right, if the market structure is changing or the order flow is changing, what is my possible target of liquidity? I'm looking at multiple things, and this is one of them, all right? And these are easy to spot, and they give you a high level of confidence when you're trying to trade towards them. Because let's say if you were aiming for liquidity levels, it's not going to get there because it's contending with these candles that don't have wicks. So as I mentioned, after we trade to those candles that don't have wicks, right, we're getting reactions from there. So if you're just aiming for liquidity, these levels, these candles that don't have wicks, can be your targets. And that is a huge game changer for me. It allowed me to take profits more easily and keep a lot of the money that I was up that was unrealized, instead of me aiming for the old high or the old low every single time. Okay, so even if you were short here, right, you were short, you saw this inverted fair value gap, that's great. You saw the inverted fair value gap, but now your target is all the way down here. But you see what happens after we trade to this candle that doesn't have a wick. It just completely reverses on you. And yes, there is a fair value gap here, but if you kind of take that out of the picture, a lot of times I'm aiming for that wick, not the fair value gap as my target. Just because I usually don't use fair value gaps as my targets, unless, you know, the narrative kind of lines up for me. But as you guys can see, right, if you're going long down in here, expecting to raid the high up here, maybe it just never gets there. And then as soon as it hits the wick, let's say if this, I don't know what the exact price is, but if you're aiming for the high and then it just completely collapses on you, you're going to be like, what the hell? Well, this is the reason why. There's a candle here that does not have a wick, and then as soon as we touch that level, it just completely collapses. All right, so this was just a really good example of how I use them, and I'm very confident in those setups when I do have them line up and pan out in my favor. And essentially, this is what we're going to look for as far as a trading process. We're going to identify a candle that's printed without a wick. So note the high impact news like CPI, etc. Candles that have printed very quickly that don't create the wick on the other end. I'm not looking at that as a power of 3 because sometimes it takes a while for that candle to actually trade to the other side of it. Sometimes it might take weeks, right? Like a lot of the examples I had shown take some time. Like this took, I don't know, a whole week before it actually traded that level. But creating a bias from this definitely helps. When we're extended and we have a candle below us that is giving off red flag indicators, that's how I know when to stay out of markets. Because so it helps both ways. It helps you with avoiding low probability conditions, right? Because there's inefficient candles above or below you. And it helps with a possible draw on liquidity if you're trying to enter the market. So there's multiple use cases for these types of candles. All right, so we're going to wait for validation that the market wants to reprice to that level. So either we're looking for a market structure shift, a fair value gap, an inverted fair value gap, a liquidity rate and a breaker, or any of those entry models that you want to use. The only thing I'm looking for is that there's indication that the order flow wants to start trading to those specific levels. That's really all I care about. Just like the example I had shown from this previous Friday, the only thing I care about is how the market is trading at the previous daily high. There was no confirmation. I literally had no confirmation on the trade. If you guys hop down into the lower time frame, there's literally no confirmation. I'm just trading based on yesterday's high, so we are in a premium, and I'm just going short based on the price, expecting that we're going to start pushing towards this candle that doesn't have a wick. That's all I need to know. I don't need an ICT entry model. I don't need anything else. I'm using price, and I'm using that no wick candle as my draw on liquidity because it's a vortex in my mind. Okay? So we're going to manage our risk of effectively and frequency of trades appropriately as the candles are not always traded to. And if you guys check the ES chart, you know what? I'm just going to pull it up. This was the ES chart. Let me remove all these drawings. So this was our ES chart. All right, this was the previous daily high. And what I was looking at was this daily fair value gap. So even though the day closed bullish, to me, that does not matter. I'm looking for a run lower because there was that candle that does not have a wick. Now, it didn't trade all the way to it, but it's my draw on liquidity. I'm just using that, and I'm just going short. So I took a loss on this candle, and you guys can see on the Canva where I took the loss. Let me just go back. So I took the loss because I went short here, and then it came up, stopped me out. But because I have that candle as below me, all I'm doing is waiting for the next hourly candle. The next hourly candle trades up towards the previous hourly candle's high. I'm noting that we also have a fair value gap in here. And even though the wick is punching through that level, I don't really care. I'm just assuming that Thursday's high wasn't going to be taken, and that this candle right here is going to act as my draw. So all I'm looking for is to go short here, and you guys can see that I went short again at 5,650.75. So I took a 3 contract loss on the initial trade, and then I made it back because I sized up to 6 micros, as you guys can see here. This is my open position, by the way. And this is what's providing me confidence, because I just have so much faith in these setups because I've seen them pan out over and over again. Yes, you might think, oh, this is very gimmicky. This is like you creating something. But just trust me, go trade these setups live and report back to me. You know, drop a comment, leave a comment, whatever it is. Study these setups going forward, because I guarantee you, you're going to help. It's going to help avoid poor trading conditions. Right, so when we have news candles that print that don't have a wick on the other side of it, it's going to help you avoid, you know, when that market's retracing, but there's still that candle that doesn't have a wick. Refer to this video when you take that trade and it ends up being a loss and it trades to that candle that doesn't have a wick. All right, and come back and tell me I don't know what I'm talking about. So make sure to take partials and adjust your stops accordingly as the market trades towards our level, right? Just like I mentioned. And like I was saying, I didn't have any confirmation in here when I'm taking the trade. And this was something that I discussed in my group was, you know, people were asking, you know, should I be waiting for a market structure shift or a fair value gap or whatever the case is? To me, that's not very important compared to what the draw on liquidity is. If you have the draw on liquidity, oftentimes you can just trade the price, because when this hourly candle is trading up towards the high, I have no idea if the hourly is going to close like this. I have zero clue. I'm just trading the price based on it being in a premium based on the last hourly candle. So my stop loss went above the last hourly high. Okay? And if I drop down into like a 15-minute time frame, right? Do you see anything in here that would indicate the market going to continue lower from here to trade back towards this? So what I'm talking about was this hourly candle. So we got a run here, and then it started going higher. As it's going higher here, there is literally zero indication to me. There's no, I'm not looking at this as a bearish order block. Yes, you possibly could, but real time, looking at it live, it doesn't seem that way, right? When you're trying to find setups in the live market, it doesn't seem like that bullish order block is going to hold, because it's respecting this buy side imbalance, okay? And this is kind of where sometimes I just completely avoid ICT concepts and I'm just trading price action. Not price action in the same format of ICT, but I'm looking at, you know, how we're trading around specific levels. And that I was looking at was the last hourly high. And I'm blindly shorting it. I'm not waiting for a confirmation. I'm not waiting for a market structure shift. I'm not waiting for a fair value gap. I'm not waiting for a liquidity raid. I'm waiting for price to show me that it wants to trade towards this vortex candle. And what I saw was price stalling out towards the hourly candle on the hourly chart. And on the hourly chart, this candle was bullish, right? It was extremely bullish, and I'm shorting it, okay? Because I have confidence that, all right, this candle is inefficient. I do not like when these markets print candles like this, because I know at some point it's a risk for possible higher prices. So even higher prices going into this week, I'm not as confident in, because we still have this candle down here. Like I'm more cautious in looking for setups that you know, will pan out and possibly roll over. Maybe this market's going to roll over, right? And maybe I'm going to start looking at this as an inverted fair value gap, because then at some point we're going to trade to this. And this is, to me, is not power of 3, because this candlestick formed last week, right? So how is there a power of 3? We just had a rollover on the weekend, right? But I'm looking at this as a possible draw on liquidity because we just don't have a wick there, right? Now, it's one thing to learn about these setups, but it's entirely different knowing when and how to trade them in the live market. And I know what that's like. You learn and learn and learn, but when it comes time to execute, it's like you're jumping out of a nest and you don't know how to fly. If you're that person, I'm here to help. So if you're enjoying the content but want direct access to me to ask questions, trade live with me, and be part of a community of like-minded individuals, make sure you book a call using the link in the description. Now, I'm only looking for the most serious students who have the right mindset and work ethic, so I'm only opening up 5 seats. This ensures that I'm available to address all your questions that you might have throughout your trading journey. And if that's not you, then just go ahead and subscribe to the channel, leave a comment. I'll be dropping free value just like this video weekly. And with that being said, I'll see you guys in the next video.